Hello, everybody. Hope you're getting ready to have a wonderful weekend. So it's that time again to do my weekly video. I've done lots of videos about not prepaying your taxes, how to recognize automated letters, both from collection agencies and from the IRS using fear mongering to get you to pay your taxes. And that they use terms like penalties, which like a failure to pay penalty, which is really just an interest rate for not prepaying the government, right? Um, and and basically what I try to tell people is ultimately, the IRS doesn't really do anything, uh, nor do collection agencies do anything until they've actually assigned a real person at the IRS to your account. And then at that point, they actually start going down the formal process of putting a lien on any property you have. Typically, that happens when you owe more than $10,000 in taxes, and it usually takes uh, more than 5 years. Um, if you owe, so this is what I do. I've owed more than $10,000 in taxes in a any given year, and I will make a large $5,000 upfront payment as soon as I get the first letter in December. I file my personal taxes October 15th on the extension deadline. It is the last tax return that I will timely file. Um, then I wait until I get my first notice in December, and then I make a large payment on my taxes to show that I'm working on it. And then I start making monthly payments on it, just like I would anything else. And I make enough of a monthly payment that I usually have it paid off by October, November, uh, the following year. So basically, I treat it as a monthly debt, paid off within 1 year of filing my tax return. Now, the only reason why I personally actually pay my taxes is because they track it's called the paid preparer's identification number, a P10. They track my P10, and they also track what I have a special number that allows me to e-file with the IRS called an EFIN. They will revoke my EFIN if I have back taxes due, and I lose my ability to actually file uh, taxes, e-file taxes with the IRS. That's the only reason why I pay my taxes. Otherwise, I would wait and pay my taxes uh, when that person is officially assigned to my account and forces me to pay them, or they're going to put liens on me and take more drastic measures. This does not mean I don't file my taxes. There is a argue it all you want, show me constitutional law, whatever. There is a law that states that you are required to file monthly or I'm sorry, file your annual tax return. As long as you file annually and just don't pay, you haven't committed tax evasion. You're just not paying and you're accumulating interest. Um, so that's the typical way to do it. Now, what I wanted to show is I'm going to share my desktop here in just a minute, but the advice I give to clients is time value of money. Day traders or traders in the stock market, they will find a potentially good investment, and they will go get a loan from a bank, a short-term loan, say for a 5% interest rate, speculating that they're going to then invest those funds into the stock or the investment or whatever it is, hoping to get a 10% or whatever return on the investment. Then they will sell the investment, take their capital gains, and pay off the short-term loan when it becomes due. And so you pay 5% to borrow the money with the hopes of getting like a 10% return. So you made a 5% capital gain on that investment. We call that making your gains on the spread. Um, you can do the same thing with the government. You can say, you know what, government, I know I owe you this money, but I'm just not going to pay it right now, and I know I'm going to accumulate interest. The interest rate for the IRS is prime plus 2 percentage points. So currently today it's sitting at around 7%. It's an adjustable rate. They adjust it pretty much quarterly, and they based on the prime rate. Uh, Basic understanding of the prime rate is what the Federal Reserve loans money to banks. So if banks are borrowing money at 4%, they're going to then loan that money out for mortgages and auto loans and credit cards or whatever at some rate greater than what they're borrowing at. So the IRS takes the prime rate plus 2 percentage points, and that's their interest rate. So in the scenario that I'm going to show, we're going to assume since $10,000 is the threshold, that you typically start to incur the wrath of the IRS at some point. Um, so let's say that you owe $10,000 in taxes in any given year. And I will disclaim this. This chart does not take into account the failure to pay penalty. But the failure to pay penalty means you've prepaid your taxes, and it's much smaller than the actual interest rate. Then taxes are due on April 15th. If you, instead of paying your taxes, you will start accumulating interest. So let's say you take that $10,000, instead of paying your taxes, you put it into a Vanguard S&P 500 index mutual fund. Now, for those of you that don't understand what that is, a mutual fund is basically you are buying a share of ownership into an organization that then takes your money and invests it into a lot of different companies. So that term is called diversification. So basically, if you had $10,000 and you went and bought Ford stock and put it all into Ford, and then Ford goes bankrupt, you would lose your entire investment. But if you invested in Ford, GM, and Dodge, then you're diversified through the auto industry. And so that way, the idea is if Ford takes a hit, in theory, Dodge and GM would have to increase production because ultimately it just means the consumer is buying less Fords and more GM and more Dodge. Um, and so you diversify through the auto industry and you're able to maintain the auto industry's total capital gains instead of just one specific uh, company. Greater risk with just owning one specific company, so greater risk equals greater return. So the idea is if you're in the Vanguard S&P 500 index fund, you are diversified through the index uh, chart for the top. It's called the S&P 500. It's basically the top 500 companies performing in America. Companies like Microsoft, Google, Walmart, GE, Johnson and Johnson, very large multi-billion-dollar companies. These companies are very secure. Um, and ultimately, this mutual fund is basically banking on the fact that there's always going to be some sort of S&P 500, which means there's always going to be a US government. So as long as there is a US government and there is a dollar backed by the US government, this mutual fund is not going anywhere because there will always be the top 500 performing companies. The next thing about this is it's an index fund. Index funds means it's managed by a computer. So there are less hidden fees to pay someone to actually manage this fund for you. So this fund is managed by a computer using algorithms, and it trades through the top 500 performing companies in the nation, um, and trades based on how each of these companies are actually performing within the stock market. So, in all reality, this is a very, very low risk uh, investment. It's extremely low risk, which means low risk, low return. But your return is basically going to be the stock market in general for the top 500 performing companies. So low risk, low return. But when you compare that $10,000, so if you invest that $10,000 into the Vanguard S&P 500 index fund and compare it to what your spread would be if you had paid or the interest that you're taking on that $10,000. So this is the chart that I want to show. And this is a very good argument of why you should never pay your taxes until you are absolutely forced to. Um, so let's go ahead and share screen. So this chart, I will admit, I pulled it out of Chat GPT. So I said, okay, compare the capital gains versus the interest rate over 10 years on a $10,000 investment versus a $10,000 in unpaid taxes. So after 10 years, you're going to owe approximately $12,500 in additional taxes or interest, or let me rephrase that. Your $10,000 has grown that you owe to the government has grown to $12,500. So basically, you have gained $2,500 in interest versus after 10 years, now this is above the 17,500 mark. You actually have gained about $18,000 in capital gains. So over 10 years, the spread is almost $15,000. Why do we pay taxes? Now, I'm not I'm not telling you avoid taxes. I'm saying time value of money and cash management. I could take the same $10,000. I only have $10,000. I can either pay my taxes or I'm going to invest it. Every time I'm going to invest because my potential for capital gains over the long term is a $15,000 spread. Um, then after 10 years or any time between now and then, an agent is actually assigned to my account and starts sending me actual real we're going to put a lien on your property letters instead of just fear mongering where they say we could put a lien on your property. There's a difference between we are putting a lien on your property and we could put a lien on your property. When you get the we are putting a lien on your property, there will be an actual person's name on the letter. There will be a phone number to contact that person directly. And you call that person and you say, you're right, I owe these taxes. I will pay full interest. Give me a couple days. You jump on your E-Trade account, you hit sell, take your capital gains, cut a check, and mail it to the IRS, or just get on the irs.gov website and make the payment. Keep PDF print the confirmation that you made the payment, and then fax it to the IRS agent that is putting the lien on your property. Case closed. And you just made $15,000 in capital gains. That's what I would do. I can't because I will literally lose. It's all an automated system and I will lose my ability to e-file. But this is what I recommend to all clients. Now, this is the same concept as sitting down with a financial advisor and you have to determine your risk tolerance. This is a high risk scenario, but high risk means high reward. It's a high risk in the fact that you're not doing what the government wants you to do, right? So you're going to receive scary letters. You're going to be told that you owe money to the IRS and they're going to use fear mongering, and you just have to ignore the letters and keep going until you get the final real letter from a real person. So yeah, there is risk associated with this, and you're not doing what the government wants you to do. But this is a way to stay in compliance with the IRS and the federal government by filing your tax return every year, just not paying it, taking the money and investing it. And you're going to make more money on those taxes than any other program that you can get as a W-2 employee, running your own business, anything else. This is a great way to make capital gains. Okay, so I hope this is beneficial for everybody. Just another idea of how you can save money or increase your cash flow through the tax program. Hopefully, it helps and gives you something to think about. Have a wonderful weekend, and I'll see you next week.